Guys, last week the movement of the S&P 500 was very simple and very much predictable. And the levels and the numbers were so accurate that the S&P 500 respected each and every level and each and every number. This was my previous S&P 500 technical analysis, and in this technical analysis I have explicitly and very clearly defined the number. What was the number? 4455 4458. And the question is that why this number was very important. The reason was that there was a very heavy bearish candle. This heavy bearish candle has engulfed the previous two candles, means there were very heavy bearish sentiments, and the high of this candle was 4458. This means that S&P 500 will not go bullish until and unless the S&P 500 breaches 4458. Once it breaches and sustains above 4458, then it will be moving to 4527, and the zone of 4527, which is from 4527 to 4537. The other part was if the S&P 500 try to move up, but if it fails to clear 4458, then it will give up. And if you have subscribed to my YouTube channel for last many months or years, then you know that this is a very heavy resistance level, and any bearish movement will be coming down to 4340, and 4340 is the condition for the S&P 500 to further come down. If the S&P 500 survives above 4340, then it will give a bullish reversal. Simple. So guys, last week the movement of the S&P 500 was very much clear and it was as per our expectations. So I will show you that how the Dow Jones is going to impact the movement of the S&P 500 in the coming days, especially on Tuesday and Wednesday. Okay. Other than that, I will discuss the 452737 in very detail, and the importance once again to help you understand that even though it looks bullish, even though it looks true bullish, okay, but still the S&P 500 it cannot move up, okay, because of this. So I will discuss this thing in detail. Other than that, okay, the bearish movement, okay, and the conditions to this the bearish movement, that again I am going to discuss in this S&P 500 technical analysis. Guys, I would like to add a very small disclaimer here that this S&P 500 technical analysis is not a financial advice in any form or in any manner. I give the probable movement of the S&P 500 and for the entire US stock market based on the technicals, the options data analysis, the economic news, etc. And I do not know how you trade and what you are going to trade into. Which is why whether you are making 50% profits within a day or you are seeing 20% losses within a day, these profits and losses are all yours. Now guys, I am going to discuss the agenda of this S&P 500 technical analysis. And through this agenda, I am going to cover everything that is going to happen in the S&P 500 in the next week from September 5th, which is Tuesday, through September 8th, that will be Friday. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Now, the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Okay. Now, even though we have seen a bullish movement on the daily chart, and also the bullish movement has now been converted into the true bullish movement. True bullish. Earlier it was bullish, but because now there is a crossover in the moving averages and all of the technical indicators are aligned in the bullish direction, 100% bullish, so there is a true bullish movement. But because of the resistance, okay, at 4527 and the zone 4527/37, okay, the impact or the effect of the true bullish movements, okay, they are not seen and will not be seen in the S&P 500 and in the entire US stock market. So although everything looks bullish, but on the weekly chart, okay, there is a beautiful thing that is happening, that is through the MACD and the stochastic RSI. Okay, so the weekly chart means the big picture. So whatever is going to happen, okay, in the S&P 500 and in the entire US stock market in next 1 month, okay, or a quarter or so, okay, that I'm going to discuss in this the weekly chart. Guys, there is one more very important thing here, that all of these sections they contain a tons of valuable information. I will discuss the probable movement in this part, in this part, in this part, and then in very detail in this part. So all of these parts, okay, I will cover the probable movement, okay, in each and every part. That is why I strongly recommend to watch each and every section. Anyways, the second point of the agenda is the PCE, core PCE, inflation, FOMC, okay, and then the non-farm payroll data. Then came the PCE, core PCE, and this the inflation, okay, again the same. So the market movers, they have accepted only the selective news, only the selective data and the selective news. And the best part was that when the PCE and the core PCE data was published, and it went against the stock market, okay, against the stock market. So this data, many news channels and many news websites, they have not published the data. Anyways, we do not care what the news websites, what the news channels, etc., okay, they publish or not. Okay, we will stick to our technical analysis. So I will discuss the PCE, core PCE, okay, and the impact on inflation, and then FOMC, upcoming FOMC in the month of September on 20th, okay, and what the Feds are expected to do. Then comes the third point of the agenda, and the third point of the agenda is the S&P 500 technical analysis on the daily chart. So daily chart means, see, this is the daily chart, okay. So this was the weekly chart. Weekly chart means hawk eye view, the big picture. Daily chart means what is going to happen, or what is happening technically, or what is expected to happen technically, okay, and how the technicals are behaving for a week, for 2 weeks, okay, or so. Means for this is a very short term picture. So when we combine the weekly chart and the daily chart, then we get most accurate results, okay. So last week it was 4458, okay, beyond bullish, okay, below bearish, simple, okay, and then there's a bullish movement, true bullish movement, etc., okay. Now comes the fourth, this is the fourth point of the agenda of this S&P 500 technical analysis, and the fourth point of the agenda is the probable movement of the S&P 500 from September 5th, which is Tuesday, to September 8th, that will be Friday. So whatever is going to happen in the S&P 500, whether it is going to move up, or if it is going to come down, okay, or at first it will move up and then it will come down, or will hold, okay, or at first it will come down, hold, etc., means these are conditions, okay. I will discuss in very detail in this, the last point of the agenda. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. Now guys, I am going to discuss the first point of the agenda of this S&P 500 technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart. This is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay. So now let's first analyze the candle itself. Okay. Visible and a very good bullish candle, clearly. Okay. Although the shape of the candle is not defined, okay, but it's very heavy, looks, okay, it looks like, okay, it is very good and very heavy bullish candle. And secondly, this candle has closed above all of the moving averages, okay. So this means that there are bullish sentiments through the bullish candle, as simple as that. Bullish sentiments, no bearish sentiments, no hidden bearish sentiments, but only the bullish sentiments, right? When these bullish sentiments are aligned with the true bullish movement on the daily chart, okay, in that case, yes, we can expect further bullish movement. However, there is a problem, okay, and the problem is 4527 and 37 zone, okay. This is the zone. As long as the S&P 500 remains below 4527 and the zone 452737, okay, and and as long as there doesn't come, these are two successive closings above the zone, okay, the S&P 500 is not going bullish. Doesn't matter what the technical indicators are saying, but this is my calculated resistance level. Earlier it has acted as support. In order to gain, or in order to regain the bullish movement, okay, the true bullish movement, the S&P 500 must give two successive closings above the zone 4527 and that the zone is from 4527 to 4537, okay. Anyways, I will discuss about that zone in the last point of the agenda. Yep, so the candle is complete. So candle is bullish sentiments, and if you look into all of these are technical indicators, all of the technical indicators looks bullish. Not exactly, okay. So even though everything looks bullish, but there is a problem. The problem is that the stochastic RSI is bearish and the MACD is still bearish. Although the market movers, okay, they were trying to push it, like heavily, but then came the core PCE and the PCE data, okay, they went against the data, tried to move up. Then came the non-farm payroll data, that again, that the non-farm payroll data, it went against the stock market. Still they have tried to move it up, and on Friday they have given a gap up open, but it failed. Okay, so anyways, technically, see, again, if you have subscribed to my YouTube channel for last many months or years, then you know, okay, this is a very technical concept. MACD and stochastic RSI. Okay, although I have modified, okay, these are technical indicators. So the concept says that if MACD and the stochastic RSI, if they are aligned in the bearish direction, then the bearish will be the direction of the, okay, index. Okay, if the MACD and the stochastic RSI, if they are aligned in the bullish direction, then bullish will be the direction of the index, right? And as of now, what is happening? As of now, both of these, the stochastic RSI and the MACD, they are aligned bearish. Yes, there, okay, it looks like that the stochastic RSI, particularly stochastic RSI, okay, that it is trying to change its direction, but so far, okay, there is no change in the direction. And also the same can be seen in case of the MACD, that it is trying to change the direction, but still there is no change of direction. This means that if there comes a bearish candle next week, a bearish candle, okay, any kind of bearish candle, okay, or even a thin green candle, thin green candle, okay, then also chances are, means like there are, very good chances that MACD and the stochastic RSI will not change and they will remain bearish. Okay, but the exact value and exact this thing, okay, it will be known only when the S&P 500 comes into the session on Tuesday. Okay, then only we will come to know, okay, whether it will happen with a thin green candle or a thin red candle or a heavy, red candle that is required. Okay, because see, if the MACD and the stochastic RSI remains bearish, right, in that case, if you see that both of these are bearish, but still the S&P 500 is trying to move up, then what is it? Then what does that mean? This means that the upward movement is a trap. Simple, very simple logic, nothing else. Because eventually the MACD and the stochastic RSI will bring a very heavy fall. You will see it is moving up for 1 day or 2 days, and then, okay, the next day there will come very heavy fall. Why the fall will be there? Because the MACD and the stochastic RSI are still aligned. Okay, they are still aligned bearish, right? So yes, so as of now, what we can say is that the S&P 500 on the weekly chart is simply 50-50, means it is neutral. It is neither bullish nor bearish, right? Next week we will see, okay, what kind of candle forms, red, green, and the density of the candle, etc. And accordingly, okay, it will come out of this, the neutral situation. Either it will go bullish or it will go bearish. Simple. Okay. And if you are not aware of my Patreon community, okay, then let me tell you that, I give these the daily updates, the daily analysis of the S&P 500 from Monday through Friday through in the form of these the updates to my Patreon community members. So if you also want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 technical analysis. And the second point of the agenda is the PCE, okay, core PCE, and the inflation, NFP, consumer confidence, okay, and the upcoming FOMC. Okay, so the thing is that now the consumer confidence data, okay, it came as per the expectations of the Wall Street, and it has decreased. It has decreased to 106.1. So, and last month it was 117. Okay, means the consumer confidence has decreased. What does that mean? This means that the economy is slowing down, right? And also the consumer confidence, okay, it just doesn't say that the economy is slowing down, okay, but it says, okay, it says a lot of things. However, in our case, okay, we are just looking into this, the movement of the stock market. So, okay, for that, so if the consumer confidence has decreased, then why this the entire stock market, entire US stock market, it moved up? Because the US stock market assumed that because now the consumer confidence has decreased, the economy is slowing down, this means that the Feds will not raise the interest rates anymore, right? So I've clearly mentioned that the consumer confidence is positive for the stock market, and also this the data, okay, this the jobs, okay, jobs data, it is again positive for the S&P 500 and for the entire US stock market, right? So this was with this the consumer data. Now comes the PCE, okay, and core PCE. So why the stock market, the market movers, okay, they were afraid of the PCE and the core PCE data. Okay, the reason was simple. The core PCE is the preferred inflationary measure, okay, by the Feds, the Federal Reserve. That they want this the core PCE to decline to 2%. They are after this, whatever they are doing, the rate hike, everything. Okay, because of mostly, okay, this because of this the core PCE. They so as of now the core PCE, what has happened? Last last month it was 4.1%, but this month the core PCE has increased to 4.2%. Okay, because the core PCE it has increased this month, it was supposed to bring a very heavy bearish movement in the entire stock market. That is why the news channels, the news websites, they did not publish this the information. A very interesting thing is that now this critical data is published, but the news channels, okay, have still not published any information about this data. Only a few have published, okay, but not these are major, okay, these are players. And this generally never happens, but today it is. This means something is really fishy. However, okay, if we talk about the Federal Reserve Chairman, in that case he has clearly mentioned that if the data goes against, okay, particularly the core PC and the inflationary data, if it goes against, then definitely, okay, more rate hikes will be there. Now what happened is that on Friday the non-farm payroll data, okay, it was published. So the NFP data and the non-farm payroll data, okay, it is again, okay, it is another, big or the critical indicator, okay, for the inflation. Wall Street, earlier the Wall Street was expecting like 135,000 or so, okay, but one day before this the data was published, the Wall Street has revised its estimate to 180,000. Okay, so that because they knew that the data, okay, it will be coming more than expected, they have revised, okay, just overnight this the data, and then next day, okay, it was there that because the data, okay, it came as per the expectations. This means that the entire US stock market, it will move up or it will hold, and the Feds are not going to raise the interest rates. Okay, so this is, see, this is what the manipulation is. Anyways, the question is that if everything was in favor, if the PCE core PC data was in favor, if the NFP data was in favor, then what has stopped the S&P 500 in going up? Okay, it was supposed to clear the 4527 and 4537, okay, heavily, and it could have, means the S&P 500 could have, gone absolute bullish. What was the problem? So there was no problem. What we have seen, a gap up open, struggled, failed. Anyways, now I hope everything is clear. FOMC is scheduled, okay, for September 20th and 21st, okay, it is there. And before that, the CPI data, okay, the core CPI and the CPI, the inflation, okay, data, it will be published on September 13th. Okay, so recently we have seen a reversal in the CPI and the core CPI. So if there comes further reversal in the CPI and the core CPI, this means that our rate hike, not just one rate hike will be there, definitely it will be there, but there will be more rate hikes in the month of, October, November and so on, means at least 2-3 more rate hikes, right? Because the Fed chairman himself has recently confirmed, okay, that still the things are uncertain, and still, okay, the inflation is very, inflation is, at these the levels, it is not coming down even after raising these interest rates back to back. This means more rate hikes will be coming. See guys, there is one more thing that, no matter what happens, okay, the stock market is subject to the technical movement, okay, and you can trade technically, okay, and you need not to fall into any trap if you know the technicals, the technical movement, okay, and how it works, okay, if you know, okay, this about the manipulation, how to understand when the manipulation is happening and how the manipulation is happening, then you can avoid falling into the trap, and rather you can convert that trap into the opportunity, right? So guys, yes, for that, okay, I have this the program, that is the S&P 500 knowledge transfer program, or this is the stock market knowledge transfer program. Through this the stock market knowledge transfer program, okay, I teach the movement, hacks, strategies, trend analysis, manipulation, technicals, predictions, support and resistance levels, okay, and much more. And there are these 3 levels, 3 tiers, okay, whichever tier you want to participate into, okay, you can participate. and this is the link to my Google spreadsheet. And when you visit this the Google spreadsheet, okay, then you will see that I have discussed in very detail that what I am going to teach, okay, through this program, okay, everything from the basics to the advanced, okay, about these the technical indicators, the values, and how to interpret the technical indicators, and then the options trading, okay, in very detail, and the options trading strategies, okay, the stock market trading strategies, the stock market analysis, okay, and everything about, okay, these option calculations and live options premium calculator, okay, live calculations, okay, risk reward strategy, support and resistance levels, okay, okay, also I teach the price predictions, okay, then the trend analysis, okay, then the manipulation, okay, and intraday hacks, okay, short term, long term hacks, etc. These are some terms and conditions, okay. These are the screenshots, okay. So many people, okay, who have availed this the program, okay. And so guys, whenever you want to participate, or if you have any questions, okay, you want to ask, or whenever you want to participate, then this is my email address, okay. And also I've given the link to this Google spreadsheet in the description of this video, and also in the comment section you can visit, and this is my email address, so feel free to send me an email, okay, if you have any questions or if you want to participate. Now guys, I'm going to discuss the third point of the agenda of this S&P 500 technical analysis. And the third point of the agenda is the S&P 500 technical analysis on the daily chart. Okay. So daily chart, okay, this is the daily chart. Let me write it down. Daily chart means that the one candle represents one day, not 1 hour or 1 week. One candle means one day, right? Now on this daily chart, okay, as such there is nothing new. So guys, yes, you are seeing, okay, that there's the bullish movement, okay, and all of the technicals, they are aligned, okay, in this the bullish direction. It's still the moving averages are still converging, but two of these the important moving averages, okay, they have already given this the bullish crossover. Okay. So although and when you look into all of these the technical indicators, the stochastic RSI, MACD, and everything, okay, they are already bullish. Yes. So now so all of these are technical indicators are good, okay. The stochastic RSI, okay, it is simply, yes, this is creating the problem because it has almost hit the saturation, but not 100, it is like 99 something, okay. So as soon as it hits 100, okay, then a reversal will be there at first, okay. Thereafter the movement, thereafter the S&P 500 will decide whether to come down, okay, or to move up. So that's a different thing, but a reversal will be there, okay. Everything is there. Secondly, it has closed, okay. On Thursday it has closed inside the Chimoku cloud, okay, but on Friday, okay, it is trading, and it is sustaining above this the Chimoku cloud, okay. Now so this thing, okay, the bullish and true bullish, there is a difference between bullish and true bullish, okay. Bullish means that you can see it, okay, that it is trying to go bullish, or it is bullish, okay. But bullish does not guarantee, okay, a long term bullish movement. Secondly, bullish does not guarantee that you can buy the dips, okay. That is why we need to look into the true bullish. True bullish means, well, when all of the technical indicators, okay, they support the bullish movement, okay. And also this okay, the support, it also comes through some levels, okay. So as of now, okay, we have seen that yes, it is true bullish, okay. And if you notice that on like 3 days back, okay, even before this thing has happened in this the S&P 500, okay, 3 days back, okay, I have mentioned this thing, okay, to my Patreon community members, that what are the conditions for the true bullish movement, okay. So there were these are 3 conditions for the true bullish movement, okay. And the S&P 500 must clear, sustain, and close over 4527, okay, and the zone, that is 4527 to 4537, and keeps on trading above the zone, okay. Simple. So so this is how, okay, I help my Patreon community members understand even before the things happen, so that they can prepare, okay, very well in advance, okay. So yes, so as of now, okay, everything is bullish, and what we are going to say that the S&P 500 is 100% absolute bullish on the daily chart, okay. And also it is true bullish, it is not bullish, it is true bullish, okay. So true bullish means that any the bearish reversal will be seen, or not reversal, okay, dip, okay, this will be seen as an opportunity to buy, okay. And so that S&P 500, okay, it will move up, but not now, okay, not now. When You can do that only and only if and only when the S&P 500 survives above 4527 and 4537. This is the zone. Once the S&P 500 goes other side, sustains other side, it moves up, it gives up, it comes down, okay, it will sustain around 4527. This is where, okay, this is what we call as, buy the dips, okay. But if it loses the 452737, comes down, loses the 452737, then no, okay, it means nothing like, buy on dips, rather it will come down. Okay. See, this is how, okay, it works, and this is how we trade. Okay, we need to keep patience, we need to wait for the opportunity. Anyways, this thing is clear, okay, that the true bullish movement will not come, or the effect or the impact or the effects or the true effects of the true bullish movement will not be seen, okay, until and unless the S&P 500 sustains above 4527, okay, and 4537, right? That is there. Now, yes, I forgot to discuss the candle. If you look into the candle, it's a technical bearish candle, okay. This technical bearish candle has formed after a red candle, okay, two successive candles, okay, two successive technical bearish candles, okay. This means that there are bearish sentiments, although it is 100% bullish, even not just bullish but true bullish, but these two candles are bringing bearish sentiments, bearish sentiments. This means that on Tuesday, Monday is the holiday, on Tuesday, okay, we can expect some bearishness in the S&P 500, and if the S&P 500 gives up the 4497, okay, in that case there won't be any more bullish movement, rather it will just, okay, it will be coming down, it will be coming back, simple. Anyways, if you are my Patreon community member, then you need not to worry about that, because on Tuesday, okay, I will clear that where the S&P 500 is heading to. So through this update, okay, I will let you know. And guys, if you have not yet joined my Patreon community, then you can also join my Patreon community. And let me tell you that how you can join my Patreon community. And guys, there is one more thing, that it's not just about the daily S&P 500 updates from Monday through Friday, but I also give every week, I give minimum 5 to 10 stock market opportunities in the premium stocks of the US stock market, in the premium stocks of the S&P 500, Dow Jones and Nasdaq. Now guys, in order to join my Patreon community, I have given the links in the description of the video and also in the comment section. So when you follow that link, okay, then you will see that this is my Patreon page. And on my Patreon page, you will see that there are these two tiers or two levels, okay. So now in these two tiers, okay, there is no major difference, okay. The difference is that this tier is only for the non-US and Canada residents, and this tier is only for the US and Canada residents, right? And when you subscribe to either of these tiers, then you will get the daily S&P 500 analysis updates and the probable movement every day, pre-market, first, second, third update, final update, as well as the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, if you notice that many people have joined my Patreon community for last many months, and they are getting these daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything, as well as these the stock market opportunities, minimum 5 to 10 every week. So guys, whenever you want to join my Patreon community, you can, and you are welcome, and I have given the links in the description of the video and also in the comment section. Now guys, I am going to discuss the fourth and the last point of the agenda of this S&P 500 technical analysis. And this last point of the agenda is the probable movement of the S&P 500 from September 5th, which is Tuesday, to September 8th, that will be Friday. So guys, before I tell you these things, okay, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. So guys, yes, a few things. Number one, that there is no economic data, okay. See, yes, there will be, there will be this economic data, okay, but no significant economic data is scheduled for the next week, okay. Number two, as of now, the market manipulators or market movers, okay, they are giving a selective movement to the S&P 500 and to the Nasdaq, okay. I will not say that to the Dow Jones, no, they are giving it or they are doing it in the S&P 500 and the Nasdaq, and that can clearly be, and this can clearly be seen in the QQQ, that is the ETF of the Nasdaq. Okay, so there is very heavy volume there in the QQQ, and the reason is best known to them. See, going bullish, okay, is not a problem, you can, but for that, okay, just wait for this the level, okay, that a sustained movement above the level, and as soon as the S&P 500 gives up the level, just exit your bull positions, okay, because this will be the trap, right? Anyways, second thing was that, okay, this thing, yep, these things are clear. Now the probable movement, okay, this is what I mentioned to my Patreon community members, okay, on Thursday as well as on Friday, okay, okay, that whatever is happening in the S&P 500 is okay, this is one part. Whatever is happening in the Dow Jones, okay, that is more critical, because if the Dow Jones closes in this condition, then no matter what the S&P 500 is doing, the upward movement of the S&P 500 will be restricted. And you can see this was my final update, okay, on Friday, okay, yesterday, and you can clearly see that I have mentioned, okay, these are conditions, okay? And this also means that if the Dow Jones closes below 34,858, means the Dow Jones have given two successive closings inside the Ichimoku cloud and failed to manage the gains it made. This means that now it doesn't matter what the S&P 500 is doing, and that's what I'm saying. Now it doesn't matter what the S&P 500 is doing. The Dow Jones won't let the S&P 500 to move up heavily or in terms of the numbers. The S&P 500 will struggle again and again to clear the 4527 and the zone 4527 slash 4537. Okay, this is the zone. So this means that because the Dow Jones, it has given two closings inside the Ichimoku cloud, it has failed to manage the gains it made, okay, on these 2 days. Okay, other than that, these two closings are in a manner that the closing of the last candle on Friday, okay, it not just closing, but if you look into the candle, it's a small thin candle as compared to what we have seen on Thursday, right? This means that there are two technical bearish candles, okay, and then the formation of the candle, the size of the candle, okay, and the best part is that the kind of candle that Dow Jones has formed, okay, is it is what, okay, it is a spindle, okay, a spindle, okay. So what does this the spindle means? This the spindle means the reversal, okay, it was moving up, this, okay, this time this the spindle means, okay, this the reversal. Some might see, okay, this as a reversal, okay, in this side, okay, so it depends at how the people are going to see, but this is the true meaning of this the spindle. So now the color of the candle, the spindle, the closing inside the Ichimoku cloud, okay. So the Dow Jones is saying bearish or bearishness, okay. What does that mean? This means that if the Dow Jones fails to clear, if the Dow Jones fails to clear, what will, how much that this will be, 34,980, 34,980. If the Dow Jones failed to clear 34,980 on Tuesday, if it remains below 34,980, then there are very, very good chances, very heavy chances, okay, that the Dow Jones will come down and everything will come down, Nasdaq, S&P 500 and everything in the US stock market. However, okay, only Dow Jones will not say that, okay, this thing will happen, but rather, some other things, some other technicals, okay, and also the movement and the kind of candle in the S&P 500. So multiple factors will be there, but yes, the most or the major portion will be this Dow Jones, right? So the Dow Jones is there, yes. Now I was talking about the S&P 500, that the movement of the S&P 500 will be restricted, okay, even if it try to move up, because the Dow Jones will bring the bearishness. So the bearishness in case of the Dow Jones, okay, will not allow the S&P 500 to give any good bullish movement, even if the S&P 500 wants to, because as of now Apple, okay, Apple is the primary contributor to the Nasdaq as well as the S&P 500. Apple is trading in some what we call as, or Apple is showing irrational behavior, okay. So recently Apple has announced that there will be this on September 15th, okay, Apple is going to launch new products, and from that day onwards we have seen heavy movement in Apple. Okay, back to back heavy movement in Apple. Okay, but as of now Apple is trading or giving an irrational movement, and Apple is trading at the critical and at the saturated technicals, right? This means that once this the movement it stops in Apple, okay, in that case what will happen? Apple will come down and Apple will give a good fall. When there will be a good fall in Apple, then there will be a very heavy fall in the S&P 500 and the Nasdaq. Okay, so we have discussed the Apple. Yes, I was talking about this, the upward movement. Okay. Anyways, I hope this the Dow Jones. Okay, this thing is clear. Yes, there is one more very important thing. Even though the S&P 500 has given a true bullish movement, okay, but the effect and the impact of the true bullish movement will be seen only and only if the S&P 500 manages to survive and manage to sustain above 4527 and 37. So this is very simple. Okay, this is not a rocket science. Okay, just a number. You just need to remember the number. Okay, and wait for the closing. That's it. And there must come two successive closings in order to confirm that the S&P 500 is going to sustain. That's it. Okay, no rocket science, right? So even though there is the true bullish movement, but the real impact will not be seen until this condition is seen. So what actually brought the true bullish movement? There's the crossover in the moving averages. Okay, after the S&P 500 was aligned bullish through all of the technical indicators. Right? However, there is no crossover in the moving averages in case of the Dow Jones. What does this mean? This means that if the Dow Jones gives up, in that case it will form a slip. Okay. And once again, if you have subscribed to my YouTube channel for last many months or years, then you know that the concept of the slip. Okay, so this is not a technical definition slip. Okay, this is something that I have made myself slip. What happens is that okay, these are moving averages. Okay, these are my defined moving averages. Whenever these moving averages, okay, they try to cross over. However, something happens and the crossover doesn't happen. Rather, the moving averages was about to cross over and then it simply failed. So what happened? A slip. It simply slipped. Okay, it simply slipped. Okay, now because it has slipped, this means that whatever was the movement or whatever was the direction, okay, of the movement, that will be there. This was the direction. This was just a small reversal. If the slip forms, then very heavy fall. Very simple concept. Okay, it works 100% of the time, right? So only the slip must form. This means that whatever we are seeing in this the S&P 500, okay, it is not true. Okay, rather it is what we call as illusion, kind of illusion. Now let's talk about the numbers. Okay. So numbers means, so guys, there is one more thing. Okay, on my website I have the section daily S&P 500 analysis and updates. Okay, so once the week is over, then I publish okay all of the updates, all of these the updates, okay, that I have given to my Patreon community members in the previous week. This means that when you go through these the updates, then there is a tons of information, tons of valuable information. Anyways, so now the picture is clear that the S&P 500 is not going to move up, okay, or is not going bullish, or is not going true bullish, okay, until and unless it clears or it sustains above the zone 4527 4537, and we need two candles on the daily basis, two successive closing. Means on one day there will be a closing above this, okay, the zone, then the next day also there must be a closing above the zone. Okay, once that happens, then we will see that the full impact, the full, or how whatever it will be, okay, the full effect of the true bullish movement, okay, once it comes to this side. In that case, yes, in that case it can move further. It can move further to what? It can move further to 4 4650, it can move further to 4607. Okay, that was this the previous high and all. But yes, there is one thing, okay, that is very much clear, that the S&P 500 is not going or will not be able to move any further up, okay, until and unless it clears the 4607. Okay, and if you remember, sorry, 8. Yep. Okay, so let's keep it 4608, because 4608 is my calculated resistance level. And last month we have seen, okay, in the month of July we have seen that it hit 4607.07. Okay, almost 9, means just very near to my this the resistance level. Almost it hit the 4608. 4607.07 was the number. Okay, the high of this candle, and it gave up. Okay, so this is why, okay, my calculated support and resistance levels are very heavy and very accurate. Anyways, so this means that even if there comes a true bullish movement, the S&P 500 won't be able to move any further up, or it will be able to move up only and only up to 4608. That's it. Okay, nothing beyond that. Okay, and yes, there is one more logical and technical reason, and that is the S&P 500 is the S&P 500 is what? The S&P 500 is, as of now, the stochastic RSI. Okay, the stochastic RSI in case of the S&P 500, okay, it is trading almost at the saturation. This means that even if the S&P 500 try to move up, then what will happen? The stochastic RSI will hit absolute 100, and a fall will be required. Technically, a fall will be, okay, it will be demanded that a fall must come. Okay, so that is why 4608 maximum. Okay, next week the S&P 500 can go. Data is not there, nothing else. If the manipulation happens, and manipulation happens in open, okay, then that will be the only case, okay, it can work this way, otherwise no. Now okay, yes, one more thing. This is the bullish part. If the S&P 500, okay, let's say the S&P 500 is it has sustained above 4527, 4537, fine, let it be. But because of a stochastic RSI, okay, it will be coming down. When it comes down, because of a stochastic RSI or because of any other reason, when it comes down, in that case it must not close below 4527 and 4537, must not close below. I repeat that once the S&P 500 starts trading or has sustained above 452737 and is trading and sustaining above this thing, okay, and it gives a bearish reversal because of the stochastic RSI or any other reason, then this bearish reversal, the closing must come above 4527 and 37. The closing must not come below 452737, because if there comes a closing below 452737, in that case this will simply give or this will simply resume this the bearish movement, right? So this logic is clear, right? Now yes, the bearish movement. Now let's say that on Tuesday itself, okay, S&P 500 is again trying but struggling. Okay, and if on Tuesday if it closes, okay, inside this Ichimoku cloud, okay, and at the same time we need to look into that what is happening in this Dow Jones. If it also if it again further comes down, okay, and if the S&P 500 closes inside the Ichimoku cloud, then this will be a primary signal is because of the formation of these two candles. This will be the secondary signal that the bullish movement, okay, like there are very few chances or less chances that there will be bullish movement. Rather, there are very heavy chances that the S&P 500 and the entire stock market, including and the entire US stock market and including Dow Jones and Nasdaq, everything is going to come down. However, this is not entirely true, because if the S&P 500 gives one more candle that is above the Ichimoku cloud, I will tell you the number, okay, in the real time, but it should be like 4516 something. Okay, if the S&P 500 sustains above the Ichimoku cloud, but the Dow Jones fails to sustain above the Ichimoku cloud, in that case again bearish movement. Because you must understand that it is not the S&P 500 that is driving the Dow Jones. It is the Dow Jones that is going to drive the S&P 500, right? Yes, there only and only if there comes a news, okay, particularly for Apple or Microsoft, okay, or Nvidia or Google, Okay, these are the big tech companies and their weightage is very heavy in the S&P 500. If there comes a extremely positive news, that will be the only case and that will be the only condition where we can expect, okay, a bullish movement. Otherwise the Dow Jones will drive the S&P 500, and through these the daily updates, the daily analysis, okay, I will tell you, okay, what is happening and what is going to happen, right? Now the question is that what is there in this the bearish side? Bearish side, everything is good and everything is open until 4355. Okay, there is no problem. Okay, it can come down technically, logically, it can come down to 4355, no problem. Okay, between 4527 and 4355 we have 4497 and we have 4396, and between these two we have 4458. Yes, 4458, definitely 4458 will be there, because earlier, okay, this was the point, okay, strong point, and this 4458 has defined the bullish or the bearish movement, so 4458 will be there. Okay, so any bearish movement, okay, 4497, then there are some other very good and very good, these the support levels between these two. So that I will discuss on the daily basis, okay, in the pre-market update, right? So that I will define, but yes, 4458 will be there. After 4458, then there will be many other, like 4425 will be there. Okay, 4425 will be there, some other, and then 4396, and between that, and that means maximum up to 4355. Maximum up to 4355. Okay. And if we calculate a fall from the current position to here, around 3.7%. No, not so. 4355 is very little. Okay, let's keep it up to the 200-day moving average, that is 4237. So let's keep it logical, 4237. Okay, so 4237 means 6% fall in 1 week. Fine, yes, this looks good. Okay, see, guys, for those, okay, who think that the S&P 500 can give only limited movement, like 2%, 3% in a week, okay, no, because if you look into this the previous week, okay, so we have seen, okay, that it has moved from this point to this point like 4.5%. Okay, so within a week 6-7% S&P 500 can easily give bullish movement, bearish movement, it can easily give. Okay, provided that the technicals are not saturated, because if the technicals will be saturated, or the technicals will saturate, then this much movement or even 1% movement is not possible. Okay, so maximum up to 4237. However, if there comes a bearish movement, a heavy fall for any known or unknown reason, then also 4355 will be able to handle that fall, and then we will see a reversal. But if the momentum is so strong, or if everything is so heavy and so strong that the S&P 500 breaches 4355, in that case it will be heading to the 200-day EMA. As simple as that, no rocket science, right? Anyways, guys, I hope all of this thing is clear, and still if you have any doubt, or if you have any confusion, okay, then you can look into these my daily updates or daily analysis, and you can join my Patreon community. But if you can't, then no problem. Okay, you can simply learn a lot. Okay, there is a tons of valuable information, okay, that is available on my website, okay, in these through these the daily S&P 500 analysis and updates, okay, which are posted only after the week is over. But if you want, okay, these updates in the real time, then you can join my Patreon community, okay, and you will get these updates real time, even before the things happen in the S&P 500 and in the entire US stock market. So guys, hit like if you have liked this video, and if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. And guys, I will given the links to my program, like S&P 500 knowledge transfer program, or the 30% returns in 1 year, and to join my Patreon community. So I've given the links in the description of the video and also in the comment section. So guys, this was the S&P 500 technical analysis, which is for the next week, that is from September 5th, which is Tuesday, to September 8th, that will be Friday.